Welcome back, traders. I'm Nalnakshi Swami. Here explaining. Unfortunately, while explaining the optimal trading setup second in this smart money concept, some internet issue happened, so I was not able to record the whole thing. Now I'm going to continue the video, which was off done. I'm discussing the second optimal trade setup. In the second optimal trade setup, what happens is market is coming down and makes a lower high, and it is an order block, sell the supply zone. When supply zone is created, it breaks the structure and makes lower low, and then it rallies and goes up to this order block, this supply zone, and mitigates, takes the order from there and makes a, after making an up move, it makes a lower high, forming another order block. That becomes an unmitigated. You can see this type of setups in the market, and while coming down, it creates fair value gaps. Imbalance candles like this. Imbalance will be there. Fair value gap that provides an internal liquidity for the market. And then it breaks the structure of the lower low, BOS. Actually, it breaks here and makes a lower low. After making a lower low, it makes two attempts, same type, double bottom. Equal low is formed, and then market equal low will be created. This scenario will be created to facilitate liquidity in the market. So this scenario, you need to get this set up. And then market rallies to this unmitigated area order block, and then it gets sold off. So you can anticipate in advance, after seeing all these setups, break of the structure, making lower low and equal lows, and the presence of unmitigated order block, you can anticipate the market rallying towards that, and it is continuing to the downside. Downside will be continued in this form, creating an illusion of double bottom and making the traders to enter into long position, and then they get trapped. This is another trading setup. So you can anticipate when you see double bottom, you can take your position to the unmitigated order block, and when it approaches this unmitigated order block, you can go short in the market, placing the stop loss above the mitigated supply zone. Next third setup is in higher time frame. So you need to identify on the daily time frame or the 4-hour time frame, you have to identify the supply zone. So market rallies, makes an high, and it makes a low, breaks below low, and this is then higher time supply zone. After that, it rallies. It made a low, and it rallies, and it will have a large supply zone with a single candle. You can see I have mentioned single big candle in large supply zones, and goes down, breaks below this low, and it seeks the external liquidity, making lower low, and then it starts moving, creating bullish order blocks. See, every time it pulls back, it is creating bullish order block. That means making higher highs and higher lows. And then it goes into the zone, supply zone. Because since it is a very large zone, it goes into the large supply zone, just taps into it, and it comes down and creates another bullish order block. And what it does is, here it takes away all the stop losses which is created from this tapping, and then there is a large supply zone and it starts moving down. So in the higher time frame, if this setup is presented, you can anticipate for in advance, you can anticipate for that. So you should locate higher supply zone and also the supply zone beneath this large supply zone, and you have to anticipate for this. These are the three very good setups you can anticipate for the liquidity. So let me go to the chart. Let me explain whether one setup is available in the market. I'm going to the Nifty chart on the hourly time frame. I've enabled the indicator smart money concept. It is available in the trading view. You can enable it so that it can help you. Sorry, 1 minute. I'll enable it. I don't need it because I'm able to locate that. See, what has happened is market made high, low, and higher high. Here, it created equal high. You can see that equal high, and also it came down, break below this low, making a lower low. And then it tapped into the supply zone 2 times. You can see 2 times here, and equal high is there. So equal high is there. It has not gone into the, it is a large supply zone indicated by a single large candle. Let me zoom it so that you will appreciate that. Okay. Let me zoom this area. See, this is a big large candle creating an order block. This is point of interest. It stopped, just went into the, penetrated into this. It did not go there completely, and it penetrated twice it went, and a scenario has been created for the equal high. Equal high has been created. Now market is broke this structure, made a lower low, and there is an internal liquidity here. Internal liquidity is fair value gap. See, if I see there is a fair value gap over here, FEG. So market has tapped this liquidity zone. This is the dynamic liquidity zone, and it started reacting. Now it is coming down. Now it has to, my point of interest is there is liquidity lying beneath this order block. This is buy order block and liquidity beneath this, because in higher time frame it has made an equal high, equal low. So there is a liquidity beneath this, and also there is fair value gap. So market may come. So in advance, I'm anticipating 21,733 is my point of interest. I keenly watch this zone, entirely watch this zone. This is the area of dynamic liquidity. So when market taps into this zone, there may be a strong reversal up to this point. Since it has created equal high, there is a static liquidity over here. And then when it approaches there, I can go short in the market. So even otherwise, if I see reversal from this, I can go long up to this, crossing all this. So probably mostly in the next week, market may come down to this level. This is my level, 21,790. And then I can anticipate for that. And when it taps into this, the market may come down to mitigate this zone. This is unmitigated order block. So like that. So the present scenario, see, you need to identify all these setups, valid setups. So scenario already created in the market, equal highs and equal lows and point of interest is over here. So I'm waiting for the liquidity sweep in this area. In this area, probably I'm anticipating that. I closely watch this, and when I go to the lower time frame, around 15 minutes or then, I will see for the change of character and the break of the structure, and then I'll position myself to the long entry towards the this order block, and then the market may sell off. This continues on and on. This is the setup. This is one example of the smart money order block scenario which has been created at present in the Nifty. So when I come across the other setups, I will make another video for you people. At present, you can see that. Whether we can see in Bank Nifty, let us check. Bank Nifty. What is happening in Bank Nifty? Bank Nifty, it's making a series of lower highs, break of structure, and the market has rallied from over here. Yes, it has already created equal highs, and then it rallied. It has taken liquidity above this area. These are all unmitigated order blocks, and the market can tap in. My point of interest is over here. Here, what the market can do is it has to create double bottom, and it has to sweep the liquidity like this. So still I'm not seeing any, at present I'm not seeing any setup. So it has to stop beneath above this order block before mitigating this, so that it will sweep the liquidity and tap into this zone, and then market can rally past this. Past this, and equal high is there, it can grab liquidity above this, and then it can come down. This happens in even this area is also, it has been mitigated. Yeah, this order block has been mitigated. Okay. Here, this order block has been mitigated. It has taken the liquidity. See the liquidity over here. It has come down and it has swept the liquidity, and then it has gone up. Now it is equal low is here, 1.47,199. Market has swept the liquidity and rallied and made an order block, sell order block. It is making lower high repeatedly. It is changing, and okay, 1 minute. Let me, here, break of structure, unable to order. Now it come down. It may come down. My point of interest is over here. This is the area. Probably market can stop around this area. If it makes this setup equal low setup and sweeps the liquidity, if it sweeps the liquidity, if the setup is formed just above this level, and I'll wait for the liquidity sweep, and then I'll go long in the Bank Nifty. Unless I see liquidity sweep, this is my point of interest. Market can go down or it can sweep the liquidity below that also. But this may be it may come and tap this order block. Okay, you should, there is no setup at present now. You need to wait for the setup, this type of setup in the Bank Nifty. So another index is Fin Nifty. Nifty Financial Service Index. Same scenario. Same scenario as for the Bank Nifty. there is an internal liquidity over here, fair value gap. It will probably it will come down and it may react. And then this is the order block. My point of interest is here. So you need to wait for all the even the Nifty as well as the Bank Nifty, and still correction is on. So it has to go and it has to create a scenario. When such scenario is created, then when it taps into the order block and it reverses, you can see for the reversal action in the market. Okay, friends, thank you very much. And this, since it was the previous video was often, I'm continued and I'm finishing this video. Hope this will help you to identify the setups and scenarios in the market so that you will be profitable trader and you will be successful trader, which separates from other traders. So this is my effort for you people to educate yourself and to be on the proper side of the trade. Thank you very much. Nannakshi Swami signing off.